Okay, first up's coin. Right now we're at the end of the range and we seem to be forming an ascending triangle. We clearly already confirmed the fake break with a close right at the edge of the range, or a bit above the edge of the range, bouncing from the 50. I wanted to play this level, which wasn't super clean, to be honest. I would have liked a much cleaner level with not so much scattered little resistance points above me. I mean, the only place I would have played it, I think, is above this 200 whole dollar level. Other than that, it's just way too risky, especially with this 5-minute pattern against me. So that's a skip for me. NEE. So can quote unquote predict one candle to the long side with this 3-bar play that's coming off of 9 EMA. We still have this high to deal with, but there seems to be a window until then which I can play, and there's a very beautiful range forming right on top of the 9 EMA. It can't really break down or close below it. It can break down from it. It did break down from it, but it couldn't really close below it, so that's super nice. 60-minute range is clean as hell. What I don't like about it that much is that we have gone straight from the bottom to the top of the range without much proper pullback. Let's just check. Yeah, intraday, if you see, there is somewhat of a pullback, so that's quite nice. 60 just doesn't display it well, so that kind of gives me reason to still be a bit more bullish on it, or even more bullish on it. The top of the range is quite clear. There's only like one little peak out here that I gotta be afraid of, but that's also a level in, I'm not sure if it's after hours or, yeah, I think that was an after hours little level. Let's just check. Oh no, sorry, that was yesterday's high. Okay, so yeah, I still gotta worry about yesterday's high and this little peak out here, but I have some room until then, given where we've opened, which is exactly the top of the range, which is one of my favorite things. Whenever there's like a clear range and we're opening right on it, we get a wick out and then a reclaim. That's just a super easy trade with. We got a large wick out. Usually if we get like a small wick out, then I would just place my stop loss below the wick. But now with that we have such a large wick and the level is super clear. If it weren't, I would have put my stop around here, but with a super clear level I can just clearly or easily put my stop loss below the level a bit. Don't really care about this fake out. Usually it doesn't get retested. Usually it just gets momentum and takes off, just like it did on any right here. We have some levels on the 60-minute chart. ATR is $1.5, taking 80% of that is 1.2. So that should be 79.70, but given how we have quite a lot of levels around here, I'm just shooting for those as a full target. I'm not even sure if it got any higher. Let's check 819 NE. So that should have been right around here, and we got up to 79.60. So yeah, would have been still a pretty damn good trade if I just held till end of day, or 79.70. I think I would have gotten out at the same exact price. Yeah, around 79.45. Yeah, basically the same as my full exit was here, around the 60-minute levels. Would have liked a bit of a 20 EMA touch before takeoff, or these moving averages, these key moving averages, to be a bit closer to my entry, but can't get everything. I think it was still an A trade for my setup. Could have sized it up, maybe 2 hours. Easy, I think. SPY was choppy in the morning, but we didn't really seem to give a shit on any. That had a bit of a dip around 10, 30, 40-ish, which we didn't respond to at all. Guess that was some news-based dip. Next one's NEM, which also can predict a candle to the long side. We still have some room to the 200 MA, which I think coincides almost perfectly well with this pivot high. Daily is also trending to the long side, very nicely coming off of the 9 EMA. wasn't a super nice structure until this right here, but now that we've kind of established ourselves against the 9 EMA yet again, I think I can take a long trade. Gotta be a bit careful about playing against this high right here. I'm guessing it's gonna be quite visible yet on the 60, so the actual levels are here and here, these two. So yeah, I mean, intraday confirmation is not super great. What I would have loved to do was just get either a range, a breakout, and a retest intraday, or just simply a breakout and a retest with a sufficient pullback of this level, which is approximately around here. But we didn't get either of those. The level here that I wanted to play was relatively okay-ish. Not a lot of confirmation in pre-market, a lot of ghost candles, and I don't really put much weight on those. I don't know. I think I would skip this one because of the insufficient intraday confirmation and the riskiness of going against this level on, as I said, such shitty confirmation. CPNG. Okay, so also predicting a long candle here, but it's a bit more risky. Don't really count these into the moves, otherwise it would have been insufficient pullback for my strategy. A sufficient pullback, as I said previously, is 25% or 20-25% plus. But I count the move from here. This just seems like a news-based misdirection day. So we're coming here, very solid pullback, respecting the 9, but now we get like stuck right at the highs. Couldn't really go any further yesterday, which is around 2350-ish. So yeah, this right here is the high. I wanted to play this for the short side because while we did have sufficient pullback on the daily, we had insufficient pullback on the 60-minute chart, which is quite nice, I think. We had about 22, let's say 80 till 2350. That's a 70-cent move, and we had 20% pullback until here, or sorry, 20-cent pullback there, which should be right around 28% pullback, which is just right on the edge. But given how we're at levels, and we formed a range-ish structure that we fake broke at the open with a large wick, could have taken my entry somewhere around this level. Stop maybe here above VWAP and the level and taking it to the short side. I don't really like taking these type of trades anymore. It's just not really my favorites, going for the fake ABCD or fake pullback strategies. X weekly has a relatively solid level coinciding with a high from 2022. We seem to be quite extended on the weekly chart. Our ATR is, goddamn, I can't see what the ATR is, but I'm guessing that we're actually over the ATR. Isn't that big of a deal, but it usually just means that any further movement would require extra volume or some news or something else. Or it wouldn't require, but that's usually the way it goes. We do have some extra volume on the last few days. Probably some news hit the stock, but we don't really have any super like valid pullbacks all the way from 42 down till 3760-ish, which is a very nice level on the daily, approximately the bottom of this range, which is one I wanted to play. So we had a very nice confirmation candle on the last 60-minute candle. Otherwise, every other candle between my entry and that is just a ghost candle. So I like these pretty much. I usually wait for some type of sort of a level where we open and make a fake break, which was right now on the 5-minute chart. And we opened there, got a very nice fake break to the downside entry, since it was an okay-ish level, not so clean. Maybe a stop below the wick would have been the best way to do it. Oh, I thought that was a drawing. Okay. And I played it back up to the 20 EMA and some levels from yesterday and or the day before. MU, on the weekly, we've broken down from this little support area after a lower high. We went 4 consecutive candles even. Could have played this week to the long side, but now we're back to this pivot and the 9 EMAs. I'm a bit more short biased, but I don't really like the fact that we've reclaimed the low of this level. So daily is gonna have to be really directional for me to play this. Daily set up a range-ish structure, a mini range structure with invalid pullback, might I add, with tons of lower wicks. A bit more long biased because of the range. Don't really like the invalid pullback. Don't really like that we're heading into this resistance level. And also don't really like the fact that, oh yeah, so I wanted to say that the high of the range wasn't really clear, but this high is actually quite clear. I would like maybe a bit more recent confirmation. Those tend to respond much more well to the levels. What I had in mind when I was taking the screenshot was a short after the fake break, which I think is viable, but as I said, I'm not really the biggest fan of taking these. I wanted to play the breakdown and retest of previous day close. Maybe for a range run it could have been taken somewhere around here. We formed a mini 1 minute range, we broke down, retested, put up a double bottom or double top on top of it. Could have entered here with a stop around here and just let it ride back to the bottom of the range with a target here. But yeah, I just don't really like going against structures unless I have some super solid confirmation, which in this case wasn't the case. So yeah. VST not much on the weekly. We're coming back into a past support level and a resistance level, so it's gonna be a bit risky, but the level seems to be relatively exact. We do have some mini resistance, support and resistance levels ahead, but this one was relatively clear. 82.27. Can't even see it very well on the 60-minute chart. 60-minute had some sort of an ABCD-ish structure there, which was nice. Level confirmation was okay. Would have liked it to respect it a bit more, but we set up a nice double top on top of it after we had fake broken the top of range. I usually, after we have like an ABCD structure on the 60, which right now would look something like this on the 5, and we have a range-ish structure on the top that gets fake broken, I usually like to wait for a double bottom until I play it to the long side again. That's one of my rules for the strategy, so we actually got that. That was super nice. The 1 minute chart wasn't clean, so wouldn't pay much attention to it on the 5 minute. A nice entry would have been after this double bottom was confirmed by yet another hammer within this confirmation candle, and then taken out the previous mini high around here. So that could have been an entry with a stop around here. Not sure what the risk to reward would have been on $4. That's a 3.2 buck ATR. Counting 80%, that would have been 5.4, which would have been relatively alright, but I wouldn't really go as far as that for my target because of the scattered support resistance levels around here on the daily chart. So yeah, probably this is a no-go for me. CLF 3 consecutive candle extension into a past level. So I'm a bit more long biased, although for a lot more long bias I would like a confirmation candle or even bigger extension, or for it to just be at the absolute low. Daily seems to be forming a bit of a range here with some mini peak outs. Last one was a peak out to the bottom side, so I like that a bit more. I like the fact that it's looking a lot more bullish as of recently because of these lower highs and the fact that it's flagging at the top. We do have some window to play until this level, and these little mini wicks to the bottom side from this level, so it totally can be played. We had a somewhat range-ish structure on the 5 minute here, which I like, although would have liked a bit more, would have liked for it to be filled a bit more. Anyways, we had a nice fake breakdown and then a reclaim almost instantly. Reclaim wasn't very low volume, so that was a bit troubling. But these stocks that no one is paying attention to tend to have very weird volume signals. Anyways, so what I could have done was entered here, but I didn't really like the fact that the 1 minute had already put in 2 consecutive candles before that, so this would be playing the third, and after that usually we get pullbacks. But given the fact that I probably would have had my stop loss right around here because it wasn't the clearest level of all time, I probably would have survived any pullback back to PDC or anything, so an entry here could be valid. The target, as I said, was around 13.15, so the first target was 13.15, the second would have been, I guess, 80% of the ATR, which is for 50 cents, 40 cents. So that would have been around 13.25-ish. Yep, just like I marked here. So with this risk to reward, I probably would not have gotten better than a 2-to-1, so this trade would not have made sense. But we did just break out, retest this level. Retest was kind of aggressive. I usually like a double bottom after aggressive pullbacks, a double bottom. God, I can't say this word. Double bottom, and then a retest of the little high of that double bottom, and then take it right around here with a stop here and take it back up. Unfortunately, we didn't get this confirmation, so would not have been a successful trade. Whenever there's like an extremely clear level without many peak outs, I tend to go for aggressive pullbacks on the first sign of the price holding it, which would have been right around here with a stop here, but we did have a mini peak out around here at the level. While it was quite nice, it just wasn't worth it with this level against me, the 200 against me. So yeah, probably would have been a skip for me. Riot breaking down from this large weekly structure, and we immediately are met with support below. We try to break, can't, put in 2 mini green consolidation candles. I don't really like the way the dailies set up. We are within a bigger range, don't really wanna do anything within that, but we do have a nice 60 range in the dead middle of that, so maybe if it gets extended from one side to the other, we can play it back to the middle of it. And we got some sort of an extension, but it wasn't at all extended on the 60-minute chart, and I'm guessing wasn't on the 15 either. Yep. So yeah, while the fake break did happen, I just didn't have enough confirmation to take it back to the middle, even though it worked out. Run is, well, it's not quite at this, and I wouldn't even call it a range. What I wanted to say was that it's not quite at this range as high, but it's not really a range. We have a lot of scattered overhead resistance. I wouldn't really like playing this for a long on the weekly. Maybe if something sets up on the daily, which it kind of did, just a long prediction off of a quite nice level, the 20 MA and the PDC, and we do have a window until 2050, so that's quite nice. Maybe we can not ignore the weekly, but play around it a bit, be a bit more careful with how we play the shorter time frames. So, as I said, the PDC level is relatively nice. This PDC and this level, which we dipped into, which was coinciding with the 20 EMA and the 50 EMA on the 15-minute chart, we dipped into it, made an engulfing candle, fake broke PDC simultaneously. Could have taken an entry here, stop below PDC, and let it ride until 80% of the ATR, which is $1. That would have been around 2080-ish, somewhere around here. And could have moved my stop to break even at 2050, which is this distinct high or double top. Maybe the difference I would have made with a cleaner weekly was the daily setup didn't really have any overhead resistance. It was relatively clean, still close to the 9. I would have held until 100% of the ATR, and I probably would not have moved my stop loss if we were met by this 2050 resistance. What I also could have done was, oops, that's not what I wanted to do, was add on this pullback around here. So we came around here, we did relatively aggressive-ish pullback, but curved super nicely, so this also could have met my criteria for a later entry. What wasn't so nice about it was that we had this minimum minute range formed. I don't really want to long into these, so this definitely would have been on the side that the pullback was too aggressive. We would not have had enough confirmation to combat the pullback. But after we formed a mini range around here too, and we broke out of that, I could have taken an entry here or even an entry after the break of this candle around here. And I think that would have been solid for an add or a later entry had I missed the first one. The other problem here is that 2050 was the level approximately that was around here, and we had rejected that, so would have had to move my stop loss to break even quite shortly after my entry here, which didn't really give me that much room to play with. But I think it still would have been a valid trade. 5-minute chart was very nice. 15-minute also set up for a 3-bar play, but that was only after we had taken off from the retest area. GM. Okay, so we did a V reversal off of the 50 here, 200 here, which was an approximate level as the top of the range. And now we are getting quite extended. Hadn't had a pullback, valid pullback in quite a while now. We're now getting extended. We've put in a long bar yesterday, and now we are gapping up approximately to the initiation sell-off point, which is usually a very, very strong support resistance level. Unfortunately, we didn't really get a nice confirmation on the 5-minute. Yeah, this was just a larger time frame attempt without any shorter time frame confirmation, which I definitely wouldn't go for now. BLTR, so I would say around 2-3 candle consecutive candle extension, but we did get a break around here for 30. This is the 24th of August. I'm not sure if we're at all-time highs at this time. 24th of August is, yeah, it was not all-time high, in fact. 24th of, wait. August was somewhere around here. This is where we were. But yeah, so that's not all-time highs. I would have been a bit less bearish if it were. But it was just a new 52-week high. Daily formed a range. Now we're breaking down from it. Not the clearest lows that we can see here. Also have some scattered past resistance levels. Now probably turn support against me. Don't really like playing these. The pullback was too aggressive, and even though we had a nice double bottom here and a back through open possibility, it just wasn't. It's just not my type of trade. Going against this much support resistance, moving averages, not the most extended weekly nor the most extended daily. It's just not my forte. Roku breaking out of a large weekly structure. I wouldn't really call it a range. It's more so just a backwards ascending triangle, an expanding range. But we seem to have got some news yesterday, and we had a long bar. Would say in general that it's insufficient pullback, but on long bars with high volume after such a long consolidation, I still like to play it through the long side. My backtest showed, although this is one that I had put it a while back, that after long bars like this, after the break of the absolute highs of yesterday, we tend to go an extra 40% on average and then retrace or just chop. But another thing is that within the highs and lows we tend to chop quite a lot, so I don't really like the highs and the lows of the range that I'm playing to have such a big difference like it did on Roku. I usually like them to be tighter, so had it been like this, deleting this high, I would have been much more keen to play it around here, the fake break, and just play it to the top side. As you can see, it even rejected, the high even rejected this little move around here, so yep, didn't quite work. NEM. So now we're into the 200 MA and this pivot. Not really the biggest fan for a long, maybe a bit more short because of 3 consecutive candles. Daily is not the most extended, even though it had 3 consecutive candle extension. It didn't really have a valid ATR extension from 90 MA. Usually like for price to have a bit more urgency to it. And we have quite a lot of support beneath us. So yeah, that's a no-go right off the bat. PayPal breaking out of a weekly structure nicely. We do have some room to play until this pivot high, or not pivot high, but this swing high, approximately 76, 77-ish. So yeah, we do have some room to play until then. We have gotten a bit extended, set up a range on the daily. On the 60 you can see it, fake break, reclaim of the middle, and this strong level around here, which we dipped into right at the open, but nothing was super clean. Why would you risk something on a setup that is theoretically good, but nothing is clean on any of the charts? So that's a skip for me as well. CVS, not even gonna spend any time on it. It's just right in the middle of a range. Maybe for a range play could have been good, but definitely not for a trend trade. NEE, okay, so we have 1 consecutive candle extension. We have set up a bit of choppiness within that, or not choppiness, but 3 inside candles. Now we've put in the 4th, which broke these highs, so I'm definitely good for another candle, at least to the top side, having broken this too. I think this is a super clean weekly. I love it. The daily is now putting an ABCD off of the 90 MA. We only have this previous high to deal with, and we only have 1 consecutive candle extension from the 9, so I also like that as well. 60 minutes, the ugliest so far. We have this level that I probably would have liked to play, but we have a lot of scattered support resistance, not even levels but area above us, so that's a bit ugly. Not the biggest fan. We have a slam down candle on the 15. I don't really like playing after slam down candles. Usually doesn't start the move unless it's a parabolic move, of course. So waiting for a double bottom would have been the right choice here, which is exactly what happened. We put in a double bottom and took off after that. Maybe after clearing these 5-minute highs around here and the 90 MA after the double bottom with a stop loss here and an entry around here would have been the right move to do. I think that trade was quite viable. By that time, after 10, the 60-minute chart would already have put in a nice confirmation candle here for us as well, playing it back to the highs. ATR was 1.2, 80% of that is $1, which would have been 81.1, which we got to, but probably would have front run that. Wouldn't really like to play against this resistance, so would probably have just been an entry around here, as I said on the 5. The stop loss here, of course, a bit tighter one, somewhere around here, and targeting 81.1. Probably would have been a 3-4 to 1 trade. I think 4 more likely, which still would have been valid. So, yep.